The United States is often seen as the financial heart of the world. Its dollar controls global trade, its stock markets influence economies far beyond its borders, and its banking system sets the tone for international finance. But behind this powerful image lies a reality that is rarely shown in full detail. Beneath the skyscrapers of Wall Street and the polished speeches of policymakers exists a complex world of financial crimes that quietly drain billions of dollars every year and reshape lives across the globe. This is not a story about one criminal or one company. It is the story of a system where money has become power, and power often escapes accountability. At the center of this system stands the US dollar. Because the dollar functions as the world's reserve currency, decisions made inside America's financial institutions ripple outward to every corner of the planet. When money flows smoothly, markets grow. When the system is manipulated, the damage spreads globally. This immense influence makes the US financial system both powerful and dangerously attractive to abuse. Wall Street is often portrayed as a symbol of success and ambition, but it is also a battlefield where information is currency and timing is everything. Inside massive trading floors, billions of dollars move in seconds. Stock prices rise and fall not only because of economic performance, but also because of insider knowledge, algorithmic advantages, and access unavailable to ordinary investors. While laws exist to prevent insider trading, enforcement remains selective, and punishment is rare at the highest levels. Corporate fraud plays a major role in these financial offenses. Many large corporations maintain a public image of stability and growth while hiding losses, exaggerating profits, or shifting debt off their balance sheets. Accounting tricks, complex financial structures, and legal loopholes allow companies to appear healthy while quietly collapsing from within. When the truth eventually surfaces, it is rarely executives who suffer most. Employees lose jobs, investors lose savings, and communities are left to deal with the fallout. Tax evasion is another silent pillar of financial crime in the United States. While average citizens pay taxes directly from their income, large corporations and extremely wealthy individuals often exploit legal gray areas. Offshore accounts, shell companies, and international tax havens allow billions of dollars to remain untaxed. Technically legal in many cases, these practices raise serious ethical questions. When the richest contribute the least proportionally, the burden shifts to the middle and lower classes. In recent years, cryptocurrency has introduced a new chapter in financial crime. Initially promoted as a decentralized and transparent alternative to traditional banking, crypto quickly became a playground for scams. Fake exchanges, pump and dump schemes, and rug pull projects have wiped out life savings overnight. The speed of innovation far outpaced regulation, leaving millions of everyday investors exposed while criminals disappeared behind anonymous wallets and untraceable transactions. Money laundering remains the invisible bridge connecting all these crimes. Illegal funds move through a complex process designed to erase their origins and make them appear legitimate. Real estate purchases, casinos, luxury art, and private investments provide perfect cover. By the time dirty money re-enters the economy as clean capital, tracing it becomes nearly impossible. The system does not fail accidentally. It fails because it is designed with enough complexity to hide exploitation. The American justice system officially claims zero tolerance for financial crime, yet reality tells a different story. Small-scale offenders face harsh punishment, while corporate giants often resolve massive violations with financial settlements. Companies pay fines, make public apologies, and continue operating. Executives walk away with bonuses intact. Justice becomes a cost of doing business rather than a deterrent. The global impact of these financial offenses cannot be ignored. When Wall Street crashes, markets across Europe, Asia, and developing nations collapse in response. Inflation, unemployment, and economic instability spread far beyond American borders. Countries with weaker economies suffer the most, despite having no role in the original crimes. The imbalance highlights how centralized financial power can export risk while collecting profit, For everyday people, the consequences are personal and permanent. Retirement funds vanish during market crashes. Jobs disappear after corporate scandals. Families struggle under inflation, fueled by financial manipulation far removed from their lives. Yet the system continues to operate as usual, protected by complexity and distance from public understanding. This story is not about denying America's economic strength. The United States remains one,